Rushabh Sheth joins us now. Let's take a conversation forward and understand from him what he makes of the current market setup. Rushabh, good morning. Thank you for joining us. It's an all-time high on the bank Nifty 400 points away from an all-time high. The tide has turned in favor of Indian equities. Do you think this turn is going to be a long one and we are in for more gains before the year ends?
Because if you look at the economy, I think we've kind of managed the higher interest rates reasonably well, navigated it reasonably well. I think the inflation seems to be peaking out, and hopefully the interest rates also should follow suit. So our sense is that from a standpoint of the markets overall, we think that the economy is in a good shape. Though there is some slowdown, our sense is that it should not be too much to navigate for the company. So overall, we are still positive on the economy.
What gives you the confidence that the worst is behind us? Because frankly, inflation may be down, but globally there are still a lot of concerns, still a lot of moving parts. The war is not over, and you don't know where the next bazooka could be coming from.
There are still a lot of moving parts. So I think from a domestic economy standpoint, we are well placed. However, from a global standpoint, there are still, as you rightly said, there are a lot of moving parts. Globally, the developed markets have not seen higher interest rates, and they're still grappling with it. And we don't know how that's going to shape up. So from our perspective, overall, though domestic economy is looking good, however, the geopolitical scene still remains fluid, and we'll have to watch out how it pans out over the next 3 to 6 months.
Last time when we met, your portfolio positioning was centered around Tata Com, Cipla, Tata Motors, Telecom, and Media. Has your portfolio positioning changed? Because a lot has changed in the world in the last 6-8 months.
The portfolio positioning doesn't change so rapidly, Nikunj. We generally, our average holding periods are 5 years. So, our change in positioning is very slow. And therefore, not much has changed since we last spoke. Of course, there would be some granular changes in terms of maybe addition of a couple of names and maybe selling off of 1 or 2 names. But by and large, our positioning doesn't really change very rapidly.
But you were not overweight on banks, and we discussed this briefly. Given that bank is in a leadership sector and banking is where the easy multiplier of the economy is visible, was that a conscious call, or you could revisit your call?
No, our sense is that we think that, we like banks. Clearly banks are in a very good position overall from a structural and cyclical standpoint. However, I think there are opportunities out there which are, according to us, better placed, where businesses will grow faster. And exactly what you said, because the overall macro looks much better. Of course, banks will benefit, but our sense is some of the other companies will grow faster. And that's really why underweight in banks. Underweight in banks is not because we don't like banks, it's more because we like other opportunities better.
Rushabh, hi, morning. Our viewers would be very keen to know what are these other opportunities that you think are more lucrative than banks altogether?
Look, we are looking at bottom-up ideas across sectors. So from our perspective, it is not one particular sector. Of course, as you know, we have healthcare as our largest sector, followed by telecom. But there are ideas in hard infrastructure areas. There are ideas in auto component space. We have companies across a broad range of industries. So we are more bottom-up investors. We take a more longer-term structural view on businesses, and that's exactly how we are positioned. So our positioning is more bottom-up in terms of what we like, rather than saying that we are top-down in terms of how a particular sector is looking.
Within your existing top 10 portfolio holdings, though, have you added weight anywhere?
Yeah, so we've added weight in some of the auto component companies. We've added weight in some of the infra companies. So from our perspective, we are looking at businesses which we think structurally are well positioned and hopefully will accelerate as we go into economic recovery post the slowdown that we are witnessing right now.
Hi, morning. What's your outlook when it comes to the entire earnings season? Have you spotted any interesting pockets that you believe have outperformed or ones that have underperformed?
Our sense is that Indian companies are navigating the current slowdown reasonably well. So to us, the earnings have surprised us, but for a few segments of the market where, in case of, say, consumer discretionary, we see a clear slowdown in terms of the revenue growth. Similarly, we see a similar thing happening in IT. But by and large, our sense is that overall, the businesses are navigating this very well, and therefore it is visible in terms of the earnings as well in the fourth quarter. So yeah, overall, I think definitely a positive earnings season for the market.
You had a very differentiated view on media. I mean, I would love to talk stocks, but when it comes to media, I always say, "Bhai, we are a media company. Let's not talk stocks." So granted. Now let's understand media. You were of the view that consolidation will happen, which is happening.
Yes, consolidation is happening, which is, I think, going to be a very big driver for the sector overall for the next 3 to 5 years. Our sense is that the structure of the economy also is changing. So, when we go from $2,200 per capita or wherever we are to, say, $5,000, our sense is that the spending patterns will shift dramatically, and media will be one of the big beneficiaries of that shift. So we think that it's very interesting that you're seeing consolidation right at the point where hopefully the business will start to see significant inflection in terms of consumer spend. So that's why we really like the space.
Okay. You are overweight pharma. The world is underweight pharma.
Yeah.
Yeah,
Yeah,
that's the
so
question. I mean, why are you overweight pharma?
Okay, so from our perspective, we are more liking the domestic pharma side of it. So if you look at our companies, most of them are very strong in the domestic market. We think that the domestic market in pharma or healthcare overall, by and large, is seeing or will see a significant growth and a significant consolidation. So if you look at the top 20 pharma companies in the domestic market, they still control about 40-45% of the market. And that's how when you see IPM numbers, you see the top good quality companies growing faster than the market because they're continuing to gain market share from smaller businesses, so smaller companies. So our sense is pharma is a structural consolidation story. Good companies will continue to grow faster than the market. Market itself is growing at 8-10%. And it's reasonably profitable, generates very strong free cash flows. And we've seen at least the good companies starting to kind of shift their preference over allocating money into developed markets versus, allocating more money in the domestic market versus developed markets. So I think we see a structural shift in priority, which is reflected in the quality of balance sheets. And we see a very strong domestic market, which will continue to grow for foreseeable future.
Right. Walk us through the outlook then in terms of how you're looking at the entire consumption space. Because yes, you have spoken about a slowdown in consumer discretionary, but given the fact that as well you have a lot of corporates within the consumption space who have been acknowledging the slowdown, the inflationary pressures, rural concerns, what's your outlook there?
I think overall there is some, my sense is it's more a tactical slowdown because of higher interest rates. I don't think so there is any structural issue with the demand. The demand will come back maybe in a few quarters. I think more concern in some of the consumer name is the comparative intensity. And I think a lot of segments of consumer space are seeing significantly higher comparative activity with very large players entering the market from various angles. So I think that to me is slightly more structural, longer term concern rather than the demand, which is more tactical and should kind of improve over the next few quarters.
Rushabh, considering your approach is more bottom up, what is looking top heavy right now where you would be at least wary or keep it on your radar other than banks, which you've already highlighted?
No, I think overall our sense is, look, broadly, the domestic economy should grow across segments. Our sense is that clearly we don't have too much of a handle on IT because IT is completely driven by what's happening in the developed world, especially US. So that's a space that we don't really have a great handle on right now. And I think, but there are opportunities across other sectors that we see. And where we think that there is a structural opportunity as, hopefully growth picks up as we go into second half of this year, early next year. So we see a lot of opportunities in the domestic space. This is what we like. We are a little concerned on some of these sectors where you are driven by external demand, where we don't know how it's going to pan out.
Okay, fair enough. And what about, in terms of the next trigger going down the line? Do you think that election uncertainty, what we're seeing with the debt ceiling negotiations, etc., could play spoil sport?
There are going to be a lot of moving parts. We have, as you rightly pointed out, we are heading into elections in a year's time, and then there is a lot of geopolitical uncertainty. So we don't know how the next 3-6 months are going to pan out from a overall macro environment standpoint. However, I think we are more bottom up in terms of our stock ideas. We think companies are doing a great job in terms of execution, and our focus is completely on finding ideas across the market cap and segment spectrum, where we think that the businesses are doing well and executing well. So from our perspective, we are much more focused on bottom-up ideas, despite the fact that the overall macro environment will remain fluid for at least some time.
Great to have you on the show. Thank you so much for speaking with us today.
Thank you so much.